Welcome back to Primary Source China Investment. This week we're on show H5, and we're talking a little bit about Moneyball. For those of you who don't know, Moneyball was a book written by Michael Lewis, and it was published in 2003 about the Oakland Athletics baseball team and its manager, Billy Beane. The focus was on the team's analytical, evidence-based sabermetrics approach to assembling a competitive baseball team despite Oakland's small budget. Billy Beane was famously played by Brad Pitt in the motion picture. So how does this relate to China? Well, there's a phenomenon going on right now because China can't be replaced. There's no one country where you can say, well, if I don't sell to China, I'm going to sell to India. And right now, on earnings calls in the past 2 weeks, we've heard a lot about China. So we'll give a specific example. And Peng Guo, you and I have talked a lot about this. A company like Caterpillar, they do get a lot of their sales in China, and they've actually been very, very successful in China. But Tuesday, CEO Jim Umpleby predicted that demand for their above 10-ton excavators would drop further in China, and that already accounts for 5 to 10% of overall revenue in the firm. And in April, he said equipment sales would slip below pandemic levels. And in fact, he cited weakness in China for Asia-Pac construction equipment sales decreasing by 17% overall. So all of that sounds like a huge headwind. But in fact, profit rose to $3.18 a share versus $3.01 consensus. And the company's total revenue rose about 11%. If China is the Jason Giambi in our Moneyball metaphor, North America and Latin America, where sales grew 18 and 27% respectively, are the players that made up the Giambi in aggregate. So if you lose a little bit in China, you have to make it up somewhere else. And that's what a lot of these companies are doing. What's your thoughts, Peng Guo?
I thought it is really like the China important for their business. So for this country, they should just maximize whatever revenue or sales they can get it from this market. So it doesn't matter how other market performance. They should just do the best in the China market. So that really means some of the investors, they might not buy any in China stocks or asset, but they can still buy this company's stock and get a piece of pie from the China market.
Right, and different companies are handling it differently. Just like you said, Apple announced this week also. So you don't need us to tell us or digest the Apple numbers. But the important thing that I pulled out of that call was that Apple's China revenue grew 8%, beating all other regions on the call. And iPhone revenue or iPhone market share grew while the overall market shrunk 2.1%. The only two names that are growing market share in China are Apple and Huawei is growing, very, very quickly on the mainland. So those are two different strategies. Apple definitely trying to maximize what they already have on the ground, and Caterpillar saying, well, if we've got a lot of headwinds and a lot of competition, maybe there's some other markets that we need to spend some time, money, and effort on.
Yeah, that's really like how they really like to build the global portfolio for their different product line. That's really each company's management job to figure out the best strategy for the global market.
That's exactly the point, Peng Guo. When you say that, it sounds so easy to say, but management has to see what's happening on the ground. And if you're facing greater competition or bigger regulatory hurdles, those are the decisions that have to be made. The next example we have is Procter & Gamble. Pre-pandemic, China was consistently the fastest growing market for this consumer products brand. Now, in terms of volume, it's the slowest. Of course, this could be a temporary blip, a quarter or two, but managers are under fire to make earnings. And Procter & Gamble did beat earnings, taking advantage of some of the inflationary headlines. So Procter & Gamble increased price, not only volume. But those are the kind of things. And the last company I want to talk about is Nissan, because we're hearing a lot of stuff about the auto industry in China and how great companies like BYD are doing, and how Volkswagen is really outsourcing their electric vehicles to China, to a China manufacturer. But here was an interesting comment by the CEO, Makoto Uchida. He said, unfortunately, our China sales outlook is now falling far below our production capability. That's a shocking statement. Earnings recovery in the world's biggest auto market is likely to take time. Well, that's a pretty dark statement. However, from the earnings call, net revenue increased 37% overall for the company, which was the highest ever for Nissan in the first quarter. Operating profit increased by 98% and net income was up 124%. So Nissan knocked it out of the park in terms of the quarter, but their China business is really suffering, either because of Japanese pushback or the brand or the competition or a combination of factors. So management has to step up. So what are we saying here? Companies can compete in China, and without China, companies can still beat earnings.
I would like to say China is really a competitive market. So probably like the Nissan, that's definitely traditional car company, follow the traditional car sales model, manufacturing model, everything is mature. Unfortunately, China moved to the new energy car, clean energy car period.
Yeah.
So if have to force the Nissan to make the change. I know the competition is a pain, but it also might be good for the company finding a future growth area.
Right. And a lot of industries, companies have to move very, very quickly. And like you say, it's all localization. So, either you say, Jack Welch used to say something back in the day, we either want to be number one or number two in any product or region that we compete in. If you're not highly competitive, you are not going to win in a place like China. And that's sort of the message. And then finally, I wanted to bring up Barbie, because Barbie has become an international phenomenon. And it's probably going to pass $1 billion in box office this weekend. And even in China, people are saying it's very, very popular. But the movie industry has changed. And China's movie industry is now 80-20. 80% is domestic movies and 20% is international. So as Barbie goes over $1 billion, the box office for China is 30 million. So a very small percent of the overall box office. And with that, we're going to leave it for show H5. Thanks for tuning in. Enjoy the summer.
Thank you.